Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Looking at Apple on the daily, weekly, shorter term time frames. So what started as a strong day by the bulls getting up over 115 with market weakness, erasing all of those gains and closing fairly weak down near the low of the day. So we have two key support levels to be watching. The first is the low of today, and that's down at 113.45, and the second is the low from the bearish reaction to the earnings report. That's at 113.31. If we break that level, the next leg to the downside, we're looking at the 50-day moving average of 112.25 and the 10-week moving average, which is going to be in the low 112s next week as well. If we lose those levels, the must-hold level is down here at 111.55, and that's in order to maintain the higher low and higher high pattern that we've been watching play out now on this SPY or this Apple bounce. So you can see that level right here. We have very clearly higher lows and higher highs, and if we break that level, we break the higher low pattern, and we're going to be looking for a pullback down towards 110 and then towards the low 100s. We do have some gaps down here. And if we break 111.55, our target shifts down to 105.72 to fill this gap. So important for the bulls to maintain these levels. But again, SPY is close to another leg to the downside, the S&P 500. And if that were to occur, Apple is not going to be seeing any help to the upside. And the vast majority of the weakness today was in relation to the market dumping. So let's now look at the 5-minute chart. Very bullish action, 15 minutes out of the gate. And a nice pullback, but a bounce off of the 20-period moving average support. So after this bounce, we headed higher, bounced again, and after we bounce off this moving average support multiple times, and it really ended up being 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candlesticks holding the support, you know that when that level is lost, it is a very clear bearish signal. So you patiently wait if you're not already in a trade, and the dump occurred with SPY and the Clinton emails, and that was your clear bearish signal. And we took out all kinds of support. In the first 5-minute candlestick, we took out 2.5 hours of support, and then the dump just absolutely drove it to the downside. So you could have missed the first entire candlestick and jumped in, seeing all the support breaking, and still made really nice gains to the downside. From there, the market formed higher lows and higher highs. SPY did, bouncing at the end of the day. Apple did not. It bounced, formed a higher low, lower high, and then a lower low back down towards the low of the day. So magnified, felt that bearish action, but did not see the correlation to the bullish reaction on the bounce at all. So that does have us looking for further weakness heading into next week on Apple. And again, 111.55, write that level down. It is a must hold for the Apple bulls. I appreciate you watching. I hope you have a great long weekend, and I will see you next week.